Hey everybody, watching Bull, Boom, Bear Bust. My name is JJ. We are back with another dose of economic reality. It is Tuesday, June 29th, 2021. And we're going to start off with the housing market. And you're not going to believe what a Federal Reserve president is saying about the housing bubble. It has something to do with the boom and bust housing market cycles that we've been seeing in this country now for many, many years. Now, this current boom seems like it's never going to go bust, but if we look back a few decades, we do see booms and busts in the housing market and home prices rapidly rising and then rapidly dropping. But now, since we came out of the 2008 financial crisis, we're at about a 13-year bull run in the housing market without any signs of a pullback. So we're going to talk about what the Fed president said. We've got a lot of other news to get into regarding how stimulus checks are being spent, how the big banks continue to rape in massive profits, including now add on top of that, and companies that lose money also are making millionaires out of their upper level executives because they're buying back their stocks with profits, and then the insiders are cashing out. So it's completely insane. More of all the insanity that's been happening for years, but it's just getting worse and worse and worse, and it's building up to, I don't know what it's building up to, but it doesn't seem like it's going to be good. And we need to be prepared for when this thing finally breaks. FT.com, the U.S. cannot afford another boom and bust housing market, warns Fed official. This is Eric Rosenberg, president of the Boston Fed. Now, I read through this whole article. Essentially, is what he's saying. What he's saying here is that the Fed should not allow the bust to happen. We cannot afford a boom and bust cycle. So we've already had the boom. So if we can't have a boom and bust cycle, what does that tell you? That tells you that the Fed is not going to allow a bust. Now, will they be able to pull that off? Many people say yes, the Fed has unlimited currency creation powers. They can keep home prices rising forever. It doesn't matter how many people can't pay their mortgages. They can just extend the moratorium. It doesn't matter how many people get behind on their mortgages. Also, it doesn't matter how high home prices get because banks can just keep on loaning out money, and whoever can't afford their home can just turn around and sell to the next person who can borrow large sums of money from the banks that are always going to be backed by the endless printing press, aka the Federal Reserve. Other people say no, eventually they're going to pull the rug out to cause the bust, and they'll blame it on something, maybe some sort of blackout, or they're just going to lose control or drop the ball in some other way unintentionally. There's a lot of different visions out there on what's actually going to happen. A couple quick excerpt out of this article here. Quote, and this is from the Fed president, quote, "It's very important for us to get back to our 2% inflation target, but the goal for that is to be sustainable. And for that to be sustainable, we can't have a boom and bust cycle in something like real estate." So you let me know, what does it sound like he's saying here? To me, it sounds just like he's saying that we cannot allow the bust, that they, the Fed, cannot allow the bust. Now, what kind of housing boom are we in? Here's some numbers to chew on. According to the National Association of Realtors, just last week, the median home price in the U.S. is up over 23%. That's 23.6% year over year. Now, nationwide, that's a $350,000 median home price. So the Fed's talking about getting to a 2% inflation target. Well, they certainly haven't done it in housing because it's up over 23%. But instead of allowing a bust to happen, we have this Fed person right here coming out and saying, well, it needs to be 2%. In other words, home prices still need to rise, just not as fast, just 2% a year instead of maybe 23% a year. All right, but here's the really interesting part. When the Fed talks about inflation, they're typically just referring to the CPI, which, listen very carefully, doesn't include housing, doesn't include real estate. So when they say they're going to get back to a 2% target, it really doesn't mean anything as far as what most people have to pay when you look at energy costs, food, housing, and many other things that are not included in the Fed's narrow definition of inflation when they look at the CPI. Now, also, what's been happening and how's the Fed been propping up the markets and the banks and propping up real estate in this case? The Fed has been purchasing $40 billion in mortgage-backed securities every month, along with $80 billion in treasury debt as part of an asset purchase program. All right, the Fed is just increasing and increasing and increasing continually their participation in the banking sector, propping up the housing market. Who knows what else they're doing behind the scenes with the stock market, with other types of debt, so banks can continue to loan out money that they actually do not have in their vaults. Pretty sad to me that banks can continue to lend out money while people actually work very hard for their money, and we don't have a printing press in our bedrooms that we can just go and conjure up trillions of dollars at the push of a button. We actually have to work for it, many of us anyways. But the banks, they have seems like no fear, no risk, because they're always guaranteed to be backed by the endless money printer. All right, moving on to the stock market. Record stock sales from money-losing companies. It doesn't matter if companies lose money now, because they can just continue to roll over their debt and maybe just earn enough to pay the debt. But actually, about 20% of companies don't even do that. There's about 20% of U.S. companies now are zombie corporations. But we have 100 companies listed here that are not making any profits, but yet they're still doing secondary offerings in their stock. We know about the buybacks that have been happening for years and years. We see the insiders selling their stocks. So a lot of insiders, upper level executives, CEOs continue to sell off their stock. The fact that companies that lose money, the insiders are allowed to sell their stock after buying back the stock or buying their own stock, it's pretty amazing. I guess it must be pretty nice to be an upper level executive at one of these companies. Well, a lot of Main Street people are trying to do the same thing. They're trying to keep up with the big money there, the hedge funds, the executives and CEOs, as 46% of stimulus checks were invested in the stock market. So this is out of Forbes. This goes to tell you that a lot of people, I think, feel desperate. They feel like they have to invest. Otherwise, they cannot keep up with these booming prices, these rising prices, inflation, the rising cost of living. People know that the money sitting in the bank is basically going to just get destroyed and lose value because you see prices rising, in some cases over 20% when you look at the housing market. Whereas if you leave it sitting in a bank, you're going to get a fraction of a percent and just watch your dollar basically burn sitting in some checking account somewhere. So yeah, people I think are investing out of fear. I think most people feel like they have to invest, otherwise they're just going to end up in the bankruptcy line. It's pretty mind-boggling to me that 46% of stimulus checks, people went out and invested those. Now let's wrap it up with this right here. We've talked a lot on this channel about all the millions of people behind on their rent. And here we are now 15 months since the beginning of the Great Shutdown recession. And we still have millions of people that are not caught up on their rent. Here's just an example from one state here, Virginia. Virginia giving out $1 billion in aid for people behind on rent. And this is just one state. And we told you exactly that what was going to happen. We predicted all of this. More payouts, more programs to help people. It started off, okay, just a few people, several decades ago were on public assistance. Then it continued to spread. We saw free housing as prices rose and wages were stagnant. More and more benefits handed out, more and more programs. Now, here we are, and we have to now pay back, in California anyways, pay back everybody's back due rent. And look what they're doing in Virginia. And I think most of you know what happens when you rely on assistance just to have a roof over your head. And it's not good. You don't have much freedom left. And instead of the land of the free, it's the home of the dependents. And in this case, beggars, people just begging for the money printers to come in and dish out money to the state so the state can then pay your rent. And there's still not going to be enough jobs for these people to start paying their rent again. So it's going to have to continue and continue and continue. So ultimately, The real estate market's going to be one large subsidized park. You know, maybe it's just going to be a few mega corporations and the Fed that's going to own the real estate at the end of this. I mean, who knows where this ends? You let me know, but this is not good. I hope everybody's doing well. Continue to prepare, because the crazier this thing gets, the worse it's going to be when it unfolds. Who knows how it's going to unfold, when it's going to unfold, but it's not going to be pretty, I can tell you that. Everybody keep preparing. Thanks for being here. Stay well. Keep stacking. Bye for now. Peace.